Let's get one thing straight. The single biggest reason most people will never build significant wealth isn't because they don't earn enough money. It's not because they lack some secret knowledge only whispered in Wall Street boardrooms. It's because they believe the game is rigged against them from the start. They see the stock market as a high-stakes casino, a place where fortunes are won and lost in the blink of an eye. So many decide the safest move is not to play at all. This one decision, made out of fear or misunderstanding, is more costly than any market crash. It's a silent financial drain that compounds over a lifetime. Think about it. We're taught to go to school, get a good job, save our money. Maybe, just maybe, retire comfortably in our late 60s. But nobody ever pulls you aside and explains how money can work for you while you sleep. The system feels designed to intimidate. Over the next few minutes, we'll dismantle that fear piece by piece and show you how simple it is to start on your own terms. Your brain is hardwired for survival, not for navigating the S&P 500. For thousands of years, the human mind evolved to react to immediate threats, a predator in the bushes, a sudden storm. When you see a stock's price drop, your brain doesn't see a buying opportunity. It screams danger. It floods your system with cortisol, the stress hormone. This primal fear of loss, known as loss aversion, is twice as powerful as the pleasure of an equivalent gain. The media doesn't help. Financial news thrives on drama and panic. Headlines about market carnage and crypto collapse get far more clicks than stories about normal, healthy corrections. That negative barrage reinforces staying on the sidelines. The fear is real, but manageable. The key is separating emotions from financial decisions. Trade the mindset of a gambler for the mindset of an owner. Buying a stock isn't just a ticker that goes up and down. It's a tiny piece of a real business that sells products, generates revenue, and aims to grow over time. With a long-term perspective, the daily noise becomes irrelevant. Your goal isn't to get rich overnight, it's to get rich slowly and methodically, letting compounding do the heavy lifting. That mindset shift turns volatility from terror into a long-term opportunity. Alright, let's break this down into a process so simple. You can get started before you finish this article. Here is the 3-step blueprint that anyone, and I mean anyone, can follow in 2025. Step 1 is simply choosing your arena. This means downloading a reputable, beginner-friendly brokerage app onto your smartphone. Apps like Fidelity, Charles Schwab, or even Robinhood. Opening an account is as easy as signing up for a social media profile. No more paperwork, no more phone calls, no more excuses. Step 2 is deciding on your opening move. Instead of trying to pick individual stocks, start with a broad market index fund ETF. Think of an ETF like a pre-made basket of stocks. An S&P 500 ETF, for example, lets you buy a tiny piece of the 500 largest companies in the United States all at once. With a single purchase, you're invested in Apple, Microsoft, Amazon, and hundreds more. This gives you instant diversification, which dramatically reduces your risk. Step 3 is the secret weapon of all successful long-term investors: automation. Set up an automatic recurring investment. It doesn't matter if it's $50 a week, $20 a month, or even just $5 a day. The amount is less important than the consistency. By automating your investments, you take emotion completely out of the equation. You'll be buying whether the market is up or down, dollar cost averaging. Now, what about crypto? The same principles apply. Use a trusted exchange like Coinbase or Kraken. Instead of chasing meme coins, consider Bitcoin and Ethereum, the blue chip assets of the digital world, and set up recurring buys. Allocate a small, manageable portion. Exposure, not a life savings bet. That's it. 3 steps. Choose an app, buy a diversified fund, and automate it. Let me tell you a quick story about someone I know named Alex. Until last year, Alex was the classic example of someone paralyzed by financial fear. Alex had saved a few $1,000s, but it was just sitting in a savings account earning practically nothing. The turning point came not from a hot stock tip, but from a simple conversation about inflation. The money in Alex's savings was losing about 3 to 4% of its value every year. That realization was a wake-up call. Alex opened an account and put $100 into an S&P 500 ETF. It was terrifying. For the first week, Alex checked the app 10 times a day. Then life got busy. A project came up and Alex forgot to check the app for weeks. When Alex checked again, the portfolio was up a few dollars, proof the world hadn't ended. Alex set up a $50 weekly automatic investment, small, consistent, and painless. Month after month the investment grew, some weeks down, others up, but the overall trend was positive. Today, Alex is no Wall Street guru, but that small habit has become a source of security and excitement, not fear. Most people drastically underestimate the power of time when it comes to investing. Surprising fact, missing just the 10 best days out of more than 5,000 trading days would have cut your returns in half. Time in the market is infinitely more important than timing the market. Sarah starts investing $200 a month at age 25. Ben waits until 35 to start. At 8% return, Sarah ends up near $700,000. Ben around $300,000, a $400,000 cost for delay. Here's the twist. You're already an investor. You just didn't claim the upside. Every time you buy an iPhone, order coffee, or scroll social media, you help make those companies profitable. The only thing you haven't done is claim your own piece of the pie. Flip the jersey. Start owning what you already use. 3 steps. Choose an app, buy a diversified fund, automate it. Do it today. Your future self will thank you. If this helped, hit subscribe. Click the pinned resources to get started with the exact checklist from this video.